this book came about because my parents are in their 60s and their parents are in their 80s. And both my parents are CPAs. They're very smart people, very good with money. And I'm blessed that both generations trust me to manage the wealth. And my parents are trying to be proactive with their estate planning of their parents. And I'm bringing them ideas that they've never considered or thought of, because in the CPA's mindset, it's, hey, every single person, we minimize their taxes. And then we're stepping back and thinking long term, okay, hey, what's really best for the whole family?
Yeah.
Maybe we do want to increase the taxes of the older generation. My grandmother, we made her pay, and I do have permission to say all this. We made her distribute her IRA over the last 5 years because we wanted to have her pay taxes at her rate instead of my parents inheriting that IRA. And all of a sudden they're paying taxes at their rate and they're still working. So it's a much higher tax bracket. And so now my grandmother's IRA is completely gone. And on the other side of the family, we're continuing to distribute that IRA because we're wanting to make the after-tax inheritance the most it can be. In fact, what I wanted to call the book in the beginning was Tax Efficient Inheritance.
If the point is to share this legacy amongst different generations, then sometimes it makes a whole lot of sense to have that older adult, take those RMDs, pay the taxes at their tax bracket because it's likely much lower than the, generations behind them because they're still working and they maybe, they are in their 50s or 60s and they're making the most they've ever made in their life. So they're at a higher tax bracket. And so, for me, I was like, oh, absolutely. I get that. That makes complete sense. But that wasn't my first thought. So, I can only imagine someone that is not immersed in any kind of financial planning world at all. These are going to be eye-opening, ideas that you're bringing to the table that I think are going to be just really, really valuable. So
people are, they want their investment returns to bring in, 15, 20%. And no advisor can guarantee that. But tax planning strategies can do that because if your parents are paying taxes at 10 or 12% and you're in the 32nd percent tax bracket, guess what? Having them pay those taxes instead of you is a 20% delta on that money. And so there's your 20% rate of return right there. That's not like I'm projecting, if we change this thing right here, then in 30 years, your, account's going to be hypothetically, $1 million bigger. It's no, today we save that much money because that is a guaranteed tax savings that's immediately in effect.
Yeah. Fantastic.